Ladies and gentlemen, good day and welcome to the Dr. Reddys Q3 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Richa Periwal. Thank you, and over to you, ma'am.
Thank you. A very good morning and good evening to all of you, and thank you for joining us today for the Dr. Reddys earnings conference call for the quarter ended December 31, 2023. Earlier during the day, we've released our results, and the same was also posted on our website. This call is being recorded, and the playback and transcripts shall be made available on our website soon. All the discussions and analysis of this call will be based on the IFRS consolidated financial statements. The discussion today contains certain non-GAAP financial measures. For a reconciliation of GAAP to non-GAAP measures, please refer to our press release. To discuss the business performance and outlook, we have our CEO, Mr. Erez Israeli, and our CFO, Mr. Parag Agarwal, and the entire investor relations team. Please note that today's call is a copyrighted material of Dr. Reddys and cannot be rebroadcasted or attributed in press or media outlets without the company's expressed written consent. Before I proceed with the call, I would like to remind everyone that the safe harbor contained in today's press release also pertains to this conference call. Now I hand over the call to Mr. Parag Agarwal. Over to you, Parag.
Thank you, Richa, and greetings to everyone. A warm welcome to our Quarter 3 FY24 earnings call. Thanks for joining. I'm pleased to take you through our financial performance for the quarter. For this section, all amounts have been translated into US dollar at a convenience translation rate of rupees 83.19, which is the rate as of December 31st, 2023. We continued our growth trajectory in the third quarter and delivered another quarter of financial results with highest ever sales and robust operating profit. Consolidated revenues for the quarter stood at rupees 7,215 crores, which is US dollars 867 million, and grew by 7% on year-on-year basis and by 5% on a sequential basis. The growth is led by the generics business in US and Europe, with contribution from both base business and new product launches. Consolidated gross profit margin stood at 58.5% for the quarter, a decrease of 73 basis points over previous year and 18 basis points sequentially. The decrease was on account of price erosion for certain of our existing products, partly offset by improvement in product mix and productivity. Gross margin for the global generics and PACI businesses were at 61.9% and 29.4% respectively. The SG&A spend for the quarter is rupees 2,023 crores, which is US dollars 243 million, an increase of 12% year-on-year and 8% quarter-on-quarter. The year-on-year increase is primarily on account of investment in sales and marketing activities, digitalization capabilities, and new business and innovation initiatives. The SG&A cost as a percentage to sales were 28.0% and is higher by 148 basis points year-on-year and 72 basis points quarter-on-quarter. The R&D spend for the quarter is rupees 557 crores, which is US dollars 67 million, an increase of 15% year-on-year and 2% quarter-on-quarter. The R&D spend is at 7.7% of sales and is higher by 60 basis points year-on-year and lower by 20 basis points quarter-on-quarter. The investments are driven by ongoing clinical trials on differentiated assets, as well as other developmental efforts to build a healthy pipeline of new products across our markets for both small molecules and biosimilars. The other operating income for the quarter is rupees 97 crores as compared to operating expense of rupees 73 crores for the same quarter last year. The other income was higher on account of sale of non-current assets. The EBITDA for the quarter is rupees 2,111 crores, which is US dollar 254 million, posting a growth of 7% year-on-year. The EBITDA margin stood at 29.3%. Our profit before tax for the quarter stood at rupees 1,826 crores, which is $219 million, posting a growth of 12% year-on-year and a decline of 4.6% over previous quarter. The net finance income for the quarter is rupees 96 crores as compared to net finance expense of rupees 14 crores for the same quarter last year. Effective tax rate has been at 24.5% for the quarter. The effective tax rate was marginally higher in comparison to the same period last year, mainly due to an increase in the proportion of the company's profits coming from higher tax jurisdictions, partly offset by adoption of corporate tax rate under Section 115BAA of the Income Tax Act of India. We expect our normalized ETR for the year to be in the range of 24 to 25%. Profit after tax for the quarter stood at rupees 1,379 crores, which is $166 million, posting a growth of 11% year-on-year and a decline of 7% over previous quarter. Reported EPS for the quarter is rupees 82.7. Operating working capital increased by rupees 1,227 crores, which is $148 million, against that on September 30th, 2023, mainly due to increase in inventory and receivables. Our capital investment stood at rupees 307 crores, which is $37 million in this quarter. The free cash flow generated before acquisition-related payout during this quarter was at rupees 22 crores, which is $2.6 million. Consequently, we now have a net surplus cash of rupees 5,907 crores, which is $710 million as of December 31st, 2023. Foreign currency cash flow hedges in the form of derivatives for the US dollar are approximately $672 million, hedged around the range of rupees 83.4 to rupees 84.6 to the dollar, and Australian dollar 1.1 million at the rate of rupees 58.3 to Australian dollar, maturing in the next 15 months. With this, I now request Ere to take us through the key business highlights.
Thank you, Parag, and very warm welcome to everyone joining us today. I am delighted to report yet another quarter with the highest ever revenues and robust operational performance. We made progress during the quarter on strategic collaborations to bring novel therapies to India and to improve our position in new avenues of growth globally. We are also humbled by the recognitions received for the progress we have made on our sustainability agenda. Let me take you through some of the key highlights of the quarter. Sales and EBITDA grew by 7% each. The sales growth was primarily driven by improved market share for our existing products in the US, continued momentum in our Euro business, contribution from new products, partially offset by price erosion in certain existing products due to competitive landscape. We generated healthy EBITDA margin at 29% and annualized ROCE at 37%. Net cash surplus was $710 million at the end of the quarter. We entered an exclusive development and commercialization deal with the US-based Coya Therapeutics for the product Coya 302. It is an investigational combination biologics for treatment of neurodegenerative disease, ALS. We received an approval from UK MHRA for proposed bevacizumab biosimilar. We acquired a leading women health and dietary supplement portfolio of brands called Menolab in the US. With this and our recent entry into the UK consumer health space through the launch of anti-hay fever medicine Histali as an OTC, and we have taken steps to strengthen our OTC business globally. The US FDA completed a routine CGMP inspection of our formulation manufacturing facility FY23 in October 2023, as well as GMP and pre-approval inspection PI at our R&D facility in December 2023. We issued Form FY3s with 10 observations at FY3 and 3 observations at our R&D facilities. We have submitted our response within the stipulated time frame. Our efforts in sustainability and ESG continue to gain momentum and external recognition. We are becoming the first Indian pharma company to be featured in the Dow Jones Sustainability World Index for 2023, and retaining our place in the emerging markets index for the 8th year in a row. We awarded gold medal status by EcoVadis. We upgraded in MSCI ESG rating from BB to BBB. We awarded the Golden Peacock for corporate social responsibility in 2023. Further, we are the first Indian company to pledge to a plantation initiative covering 2,900 acres by 2028 as part of the World Economic Forum first organization. Now let me take you through the key business highlights for the quarter. Please note that all references to the numbers in these sections are in respective local currencies. Our North America generics business recorded sales of $401 million for the quarter, with a growth of 7% on year-over-year and a sequential increase of 4%. The benefit of market share expansion in certain existing key products, revenue from new launches, and integration of acquired portfolio was partially offset by price erosion due to competitive environment. We launched 4 new products during the quarter. We recently acquired Menolab portfolio of women's health and dietary supplement brands in the U.S., which complements well with our U.S. healthcare and wellness business portfolio. Our European generic business recorded sales of 55 million euros this quarter, with a year-over-year growth of 8% and sequential decline of 6%. The contribution from new product launches improving in the base business volumes helped offset price erosion. During the quarter, we launched a total of 6 products across markets. Earlier this month, we entered the UK OTC consumer health market with the launch of brand allergy medication Istalite. Our emerging market business recorded sales of 1,283 crores rupees, a marginal year-over-year decline of 2% and sequential increase of 6%. The benefit of new products and price increase in certain markets was more than offset by unfavorable forex. We are on the track to deliver double-digit growth for the year. We launched 30 new products during the quarter across various countries of the emerging market. Within the emerging market segment, the Russia business grew by 3% on year-on-year basis and 7% on sequential basis in constant currency. Our India business recorded sales of 1,180 crores rupees and reported year-over-year growth of 5% and a marginal sequential decline. We anticipate the base business to deliver double-digit growth in the coming quarters. We are focusing on licensing and collaborations to bring innovation to India. A rollout of Nerivio market, which made our entry into the digital therapeutics. We are seeing adoption by doctors and repeat purchases indicate high patient satisfaction scores. India remains a priority market, and we will continue to reinforce our presence in core generics business, while investing and building the innovation spaces in line with our strategy. Our PCAI business recorded sales of $94 million, with a strong sequential growth of 11% and a marginal year-on-year decline of 1%. Excluding sales of COVID products in the same period last year, sales growth was in high single digits. We expect sales to improve on the back of strategic collaborations with regional and global players. Last quarter, we invested 7.7% of our revenue to strengthen our R&D capabilities. Our efforts are focused on developing complex value-accretive products, including several generic injectables and biosimilars, in line with our patient-centric strategy to enable access and affordability. We also continue to invest in innovative solutions through strategic partnerships, such as recent collaboration with Korea Therapeutics on investigational therapy. We have done 9 global generic filings, including 2 ANDAs in the US in Q3 FY24. We have been recently ramping up inventory to reduce the risk of supply chain disruption and building inventory for our pipeline products. We are also strengthening our position by building best-in-class capability in commercial infrastructure to leverage our portfolio to expand further. We continue to develop our pipeline and scale up our biosimilar business, being our pivot to growth strategy. Our ability to source external innovation through strategic business development collaboration will enable us to address unmet needs and patient support the overall growth ambitions of the company. With this, I would like to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Balaji Prasad from Barclays. Please go ahead.
Hi, this is Michaela on for Balaji. Thanks for taking our questions. Just two from us. First one is, what is your latest thinking on generic pricing trends, particularly in the U.S.? And could you provide a bit more color on how you see this trending going forward? And second one, what are your thoughts around the Chinese pharma market in 2024? Thanks so much.
I did not get the second one. What is? Sorry?
The second one was, what are your thoughts on the Chinese pharma market in 2024?
So the first question, with this the continuation of the pricing environment that we saw in the last couple of quarters, so we are give or take the same environment, meaning that relatively to other years it's less than it used to be, more focus on service, sustainability of supply, but obviously the business model did not change, and in every place that competitors is coming, we see price erosion that's in the same neighborhood like we have discussed in previous quarters. As for China, we do see a very good tracking of our approvals. We got 9 approvals since the beginning of this fiscal and 3 in the last quarter, so for us the momentum continue in China.
Do you have any more questions from the line of Balaji Prasad?
No, that was it. Thanks so much.
Thank you. The next question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Hi, thank you for taking my question and congratulations on good set of numbers. First one on the US product launch and filing momentum. So if I look at the first 9-month data, we have launched 12 products in the US and we have just done 8 new filings, and our total pending ANDAs also have come down from 90 in Q4 FY22 to now 79. So is it because we are focusing on few therapy areas, more complex? If you can provide some color there would be helpful.
So yes, we do have less filings, let's say overall, because we are do focus on products that we believe is meaningful, but it's still a healthy numbers of files. I believe that you'll see in the next coming months more filings that are coming, just timing of those files. On the launch piece, we will have more than 20 this year, so it looks like a healthy number. But obviously in the US, what is important is the type of product launch, less the number of launches. But so far it looks healthy for us.
Sure. And then just to follow up on that, we are now we have acquired this Manolab. If you can provide some clarity as to how does this fit into our strategy, what was probably the last 12 months sales for these brands, and what is the acquisition value that we have paid, and does the increase in borrowing quarter on quarter relate to this?
So as part at the time of what we call Horizon 2, we decided to focus in general as a company on 3 types of segments, NC and NBE. I'm talking primarily collaborations or BD acquisitions, OTC nutraceuticals, and digital therapeutics. Specifically for the US, we decided to focus on OTC in several areas, including working on digital aisle, on our private label, as well as brands in women health. So we acquired Primama in the past, and now we have a complementary products or brand that was added to it. And the idea is to create a franchise in women health supplements. So that's the kind of, if you wish, diversified the U.S. business to areas that have different pattern of demand and supply and brand awareness. I don't recall exactly the sales of Minolab before, but we are talking about the range of millions of dollars. So this is so it's relatively small. We believe that we can take it from there.
And after this, what would be our US revenue contribution from the wellness product or OTC product? I think earlier we used to provide it in 20F for the quarterly filing. I'm not sure now do we provide that.
So the OTC, if I'm on an annual basis, should be about 10%, give or take, of the overall US business.
Sure. Thank you. I have more questions. I'll join back with you.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. Sir, firstly, on the receivables which have increased on a quarter-on-quarter basis, is this on certain select products or is it across the portfolio? And for which markets?
No, receivables increase is primarily in line with the top line increase, so it's nothing unusual. It's across the markets, but largely concentrated in the US. So it's in line with the normal top line increase.
Okay. Secondly, gross margin for BSAI segment has been higher for the quarter compared to the previous quarters. So anything in specific you'd like to comment?
Yeah, we are growing, and because of the nature of the business, that it has normally a high level of fixed costs. So when you are increasing the sales, you normally will have better margins. So it's just a reflection of the growth. I'm happy that we are back to growth. It took us quite some time to achieve that, and I think now we are. It looks like in the right direction.
Okay, because second quarter the PCI revenue was 960 crores with 13% gross margin, and now it is 1,040, and the gross margin has improved to almost 22%.
Yes, so it's a combination again of the mix and the combination of the more sales, and there is nothing unusual in that. It's just a type of a growth.
Okay, and just lastly, considering the launches and the filings and the market share gain for the existing product, if you would like to share outlook for the US business for FY25, we'll see end of FY24. So if you could share some color on that.
You know that we are not giving guidance, but we are supposed to continue to do well in all the levels. So far it looks healthy for both commercial products, service to the customers, price environment. Linaprazan is going to continue to be meaningful, so all the levers should continue to work well also in the next coming quarters.
So thank you.
Thank you. The next question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Thank you so much for taking my question. If I were to look at the SG&A spend increase that we have seen in the quarter, or even if I were to look at it over a 3-year period, I know you've mentioned that we've been investing in Horizon 2 products, projects that you talk about. But from a monetization point of view, when should we start seeing this contributing to revenue? I'm just trying to understand, when should we start seeing operating leverage in the higher spend? And do you think this number continues to trend up from where we are?
Yeah. So part of it, which is related to the investment we put now in certain brands in India, will give results already in FY25 because that's the nature of the game. So we are creating demand. Some of it is related to investment that will take more time as we are putting money into building products that will be launched in FY26, 25, 26, and even 27. So likely that this level of that level in the at least on the value wise will continue to be a bit higher, but I do see more growth in revenue. So overall, it should be in the same environment that it used to be in the past, meaning before that. But let's say to your questions, part of it will be already in FY25 and part of it will be in FY26 instead.
And, if I were to dig a little deeper on the, points on the launches, I know in your analyst meet, you've mentioned certain areas that you're working on. But out of the 2025 launches that you talk about in the US, can we try to understand as to, how many of these could be, the bread and butter launches that we need to offset the base business, and how many of these could be meaningful products? Some color there would be helpful.
Yes, so we have overall about 26 products that can be launched. If we get approval, if we will, winning all the hurdles, the normal hurdles in the market that can be launched, and I'm talking about products that can be meaningful. What meaningful means, probably in tens and millions and more than that. This is what, let's say, for the sake of discussion, meaningful. The question is what combination of that will actually get to the market and what will be the sale. That's, of course, I don't know. But we are building on that to offset the period after linadulamide. And in addition to that, we of course we are planning to have a growth in the other levers as well as potential BT that will come. So the combination of those is supposed to give an address to that.
And, just to follow up on that, the 26 products would be, over the next 2 years, 3 years. How should I look at the timeline for that?
So potentially, with all the cautious about this kind of products, I refer to products that are supposed to be in the next 2 years, 25 and 26. If it's going to 27, we have more products. Of course, subject to approval, subject of winning court case, and subject to all the normal challenges that you have bringing products to the market. But let's say it's a healthy list of tough to make, tough to develop products.
Understood. And my last question on the biosimilar pipeline. Could we talk about how many products we are developing, for the US and European market? And when should we start expecting, some sort of a timeline, or let's say a progress update on the pipeline that we're looking at for biosimilars?
Yes. So we are talking about 6 products by FY30, and again, subject to receiving approval in those timelines, but and subject to winning the patent cases. But at least this is what we are aiming for. If you recall, at the time when we had the change that we made after the arrangement that we had at the time with the Merck Serono, we decided to skip a couple of years and to move to products that we have a chance to be first to market. This is the strategy. The first product should come in the beginning of calendar 2027, and then the rest of the product by FY30. Then, of course, we have a bunch of products that will come later between FY31 and FY35 ongoing. So that's right now the pace that we are planning for.
Understood. Thank you so much, Uday.
Thank you. The next question is from the line of Damayanti Kerai from HSBC Securities and Capital Markets India Private Limited. Please go ahead.
Hi, thank you for the opportunity. My first question is for your India business. So you obviously mentioned you're working on some innovative product, digital therapeutics, etc., to improve market offering. But I just want to understand, like how far these opportunities are right now for you, because it appears that these kind of product uptake might take some time. And meanwhile, your India business is, I'll say, growing slowly within the market. So, how do you bridge your growth versus market growth till the time those innovative products start delivering results?
Sure. First, just to calibrate, part of the reason that people see single digits is that Isitmus, the brand that we acquired, the price erosion that we had, which we anticipate, is part of the business plan that we took into account when we acquired this brand, contributes about 2% for that decline. Plus, in the base of last quarter, last year, we had also products that we divested. So if we are taking those, we are already in the pace of double digits. But but going forward, what's more important, we identify brands that should grow even faster than the market. So I'm talking about brands that will grow at a pace of 1.5 times the market, those specific brands. So we are building behind them. And in addition to your point, indeed, those pick up may take time, but it's a very significant pipeline that we are building now. All the products that we are bringing in innovation are better than the current standard of care. So it will be meaningful growth, more in the medium term. In FY25, I'm expecting to see double-digit growth of the India business from the big ones.
Okay, that's comforting to hear. My second question is on your US business. So obviously you delivered very good set of numbers. So few reasons you mentioned, pick up in market share for some key products, etc. So just want to understand, was Revlimid contribution for third quarter even much higher than what we saw in the first and second quarter? And have you seen like what kind of pickup you have seen on the main portfolio?
So you know that I cannot speak, unfortunately, on quantities on Lenalidomide. I can also say that it's absolutely within our expectation, and I'm expecting to be meaningful also in the future. As for mania, we see pick up. We see that it is growing. So far it is within our expectation. I'm happy for this acquisition.
Okay, thank you. And my last question is, can you talk about your progress in some of GLP-1 products, specifically for anti-obesity indication, which you might be targeting for, say, US or other export markets?
So we decided, like many others, to be in this segment. It's a very important segment for us. It's in our interest from both areas. First, we are very much into anti-diabetics, not just in India, but also actually globally. And we build ourselves, and the second is that peptides as a family is, we believe that it's a core strength of ours, both on the API as well as on the sterile facility that we have. So the combination of that, we want to play in these markets very much, and also to address some of their needs. So we are planning to launch globally, meaning in all the countries that we have reached these products when the relevant patent situation will allow us to do that.
Okay. Yes. Thank you very much for your answers.
Thank you. The next question is from the line of Surya Patra from Phillip Capital India Private Limited. Please go ahead.
Yeah, thanks for this opportunity. So my first question is on the US business. In fact, the base US business, excluding, let's say, Revlimid and the recently acquired Manus portfolio, it looks like that YOY we are kind of seeing a flattish performance despite the improved pricing scenario in the US. So, could you qualify that, whether that is the kind of trend what we have also seen, and what is the kind of growth that we are anticipating for the base business?
So I can confirm that the base business is growing, and it's attributing to our ability to and the efforts that we put on both inventories and service, and obviously relationship with customers. I anticipate that this trend will continue also in the future, and naturally the geopolitical situation and in certain areas the concern about sustainability of supply is an important topic for customers, and we see ourselves as a partner to help them with that challenge, and wherever we are successful, we also see more sales.
Okay. Regards the, let's say, sir, the recent M&As, what we have seen, let's say, leveraging the cash flow generation from the Revlimid, I think we have done a couple of acquisition and already announced 3-4 odd kind of in-licensing arrangements. So, cumulatively, all these initiatives should have also contributed to the growth in the base business. So, in fact, could you share that, okay, what is the kind of incremental growth that such M&A initiatives would have added to the base business? And going ahead over a period of, let's say, next 3-4 years, I mean, beyond Revlimid opportunity, so what base business growth that you are anticipating out of the M&A activities?
Yes, so M&As, I'm not calling it base business. It's by design new stuff that we are adding to the company. The most of the M&As is actually it's not just M&As. It's we have all kinds of collaboration, licensing in, JVs, also M&As. All of that is primarily to strengthen our future portfolio as per the strategy, whether it's in, like I mentioned, it can be on the base product like name, but mostly it is about actually what we call Horizon 2, again, NCNB, OTC nutraceuticals, and digital therapeutics. So actually most of the efforts are coming from that. In addition to that, we are always looking for opportunity. By the way, it's not the money from Revlimid, it's the money that we make also from Revlimid, but also from the other activities of the company. How much it will contribute? As much as we'll be able to buy. We potentially have a significant financial capacity, and we are very active in the market. At the same time, we are not buying for the sake of buying or for the sake of any other. We buy because we feel it's a good deal for us and it's meaningful for our strategy. So like I said in the past, we are not in a shopping spree. We are buying what we believe is good for us and strategic for us.
Sure, sir. Regards the inspection outcomes for the Virtual facility, So what risk that one should assign to it, or what is your practical assessment here? So do you find any risk to the existing business given the kind of number of observations that has been issued to you, and the nature of the observation that has been highlighted?
Yes. So you're talking about the FY23, I'm assuming.
Correct.
So first of all, what is the risk? The risk is that we will get an OAI. Is there a possibility for that? Yes, there is a possibility. There is always a possibility, but there is a possibility that it will happen. What I can update is that first we address all the observation in the people at the time. After that, we gave twice to the FDA with the blessing also of external consultants data that shows that the CAPA that we put in place is working. This is happening 2 installments, one in December and one in January. And I believe that it's a robust answer, but of course we will wait for the FDA response for that.
Sure, sir. Just one last clarification from my side. Whether you have commented on the Minolab's size and the potential contribution to our US business?
No, I did not, because I don't remember the numbers. I apologize for that.
And we've not disclosed the numbers, but as Erez had mentioned, couple of millions is what is there. And as the business progresses, we'll keep updating you.
Sure. Yeah. Thank you, ma'am. Thanks a lot for all your responses.
Thank you. The next question is from the line of Bino P. from Elara Capital. Please go ahead.
Hi. Good morning. Good evening. Just a couple of quick questions. One, you have this product Lumify, which you have been licensed in the US. Is there any timeline we can get regarding the approval of the same?
Which product? Sorry, I missed it.
Generic Lumify.
So which one? What?
Lumify.
I don't have any information about this one.
Okay.
That is there actually in the pipeline product, and we'll keep updating once, when the same approval is in place.
Okay. Second, on biosimilar Rituxan, could you give some color on what sort of timelines you have in mind for the launch? Also, given the recent inspection of US FDA and the outcome, etc.
So we submitted in April. We got the FDA inspection actually on time in October. We addressed the FDA observation. We did not receive any additional information. So if everything will be without any CRL or any query that will come from the US FDA, the earliest that we can get approval is the end of April, but of course it may delay if we'll get any query or CRL.
Understood. Okay. And as you mentioned about this biosimilar pipeline, which kind of starts from CY calendar year 27 and going into the 30s. Do you have some products which could be among the first wave or the first biosimilar to some of the products within that?
This is the intent. All the products that we are developing with the intent to be either first or in the first wave.
Understood. Okay. Great. Thank you.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Yeah, thank you. Good evening. Thank you for taking my question. It is just the first one is on the overall CDMO kind of space. I know you have a subsidiary, but just want to understand, are you able to see more demand coming from global innovators towards India-based companies, including companies like yourself or your subsidiary? So that's the first question. And, are you investing in capacities either on the small molecule side or the biologic side for manufacturing for CDMO?
So it's yes for both. The caveat is that still our business is not that big, so I cannot say that it's an overall global trend, but the trend that we see is the growth. And indeed, we do invest in capacity both on the labs as well as for production, for products that we have contracts and we know that it will be, that the capacity will be, of course, be paid by those contracts.
So I'm just trying to understand from a capital allocation standpoint, will this be significant for you, or you think, we have enough other projects in the pipeline for us to be, or do you think this will be small part and will not be ramping up?
The CDMO is not, in the overall scheme of things, capital allocation will not be big. But it's a business that should go from tens of millions of dollars to hundreds of millions of dollars. That's expectation. But in the overall scheme of things of this, the overall size of the company, it's a relatively small business.
Got it. Helpful. Just a financial question to Parag. I'm just looking at your disclosure around net cash generated after removing taxes and looking at FCF, right? So it's been, the conversion has been low. So just want to understand, I know there has been an acquisition you paid out for in the quarter one, but just want to understand either in terms of CapEx or in terms of intangible buildup, is there something that we need to keep in mind?
So I think the only thing I would point out is what it is mentioned, which is we are investing in strategic inventory buildup. So we are investing in new product pipeline buildup. Also because of the supply chain, the sea routes disruption, we don't want to, lose any sales. So we are also increasing inventory in our front-end markets. So it's primarily the working capital impact apart from receivables increase, which is in line with normal sales. So that's the key reason. Otherwise, our cash flows on various fronts continue to be healthy. The conversion is healthy.
Got it, Parag. Thank you and all the best.
Thank you. Just a reminder to all the participants that you may press star and 1 to join the question queue. The next follow-up question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Thank you for the opportunity again. Just continuing on the last question on the inventory build-up. So how much of our product would probably be going through sea route now and anything going through Red Sea route as of now?
So the majority of the products are going for the sea route. Actually, the situation creates an opportunity actually to move something by air in a strange way. Certain products even better to do by air now. But of course, this is a volatile situation and may change. But in general, we are trying to have the majority. Majority, it means that for us it should be 80% plus. The second one is that we are trying to have as much inventory in the US, very close to the customers, out of our service, to address customer need. We see that as an advantage for us, as we can give the customer a service that they cannot get from others. So this strategy, of course, leveraging the fact that we have a healthy balance sheet, help us a lot to grow.
Sure. And just one related question in US, over the, let's say, last 3 to 4 quarters, how has the one-time or short-term supply opportunities behaved for you? Are those supply opportunities increasingly coming to you or decreasing in the last 3-4 quarters?
I would say that the one-time situation was not big, and there is no, let's say, tangible trends on that. For me, it's more of the fact that if we are gaining share, we are gaining it for the long term, and this is more something that we are focused on, and most of the growth that we have in our base products is more longer term in nature rather than one-time buy.
So is it fair to say that now the agreements that are being done are for a little longer period of time versus what it used to be, let's say, 2 years back?
Every customer has its own pattern of procurement. I don't want to go into details, but in general, we do see appreciation of the approaches we are taking. So we are trying to be positioned as a partner for our customers, and certain areas they appreciate it.
Sure. And one on the India business. So we have said that we want to focus on our key brands we have identified in India where we want to grow 1.5 times the market rate. Could you provide some ballpark number as to how much of these key brands will be contributing to our India business?
So most of the contribution to the overall double digit that India is supposed to do will come from those brands. So when they will grow at the pace that you mentioned, the overall India business should grow by double digits.
Sure. And the last one, because we are focusing on the GLP-1 opportunities, can you provide some color on how much is our peptide manufacturing capacity, and are we manufacturing anything currently for regulated or semi-regulated market?
We are focusing not just on GLP-1, we are focusing on beyond that, like other peptides, etc. But to your point, yes, we are making, but most of the volume is yet to be launched because the products are still under patents or are still under approval process by either ourselves or by partners, external partners.
Sure. And but any capacity that you want to put out, like some of the other global players have put out that they can manufacture. They have 32,000 liter capacity, to manufacture GLP-1. Any?
Let's say that we invested a lot in our capacity, both on the API as well as on the finished products. But I will not refer now the numbers of liters and stuff.
Sure. Thank you and all the best.
Thank you. The next follow-up question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Yeah, thanks again for taking my question. Just to confirm, out of the 26 products that you mentioned there is in the US pipeline, which are meaningful, none of these would be from Bachapalli. Would that be a fair assumption?
None of them, sorry?
Are from Bachapalli, FY23?
In FY23, we do have, I think, 2 products that are part of that. And so in a case that we will have an issue, we will have to move it to another site that we have, if it will come into that situation.
Okay. From a pipeline dependence, how, upcoming launches, how important would FY23 be? Just to understand the risk in case of an adverse outcome.
Not significant. Most of the products are all solid, and most of them commercial. So not significant. Obviously, we don't want it. It's not nice to our reputation, etc. But it's not significant. Most of the growth will come from Isaac and not so much.
Got it. And Parag, on the moderation in the gross margin that we have seen in the generics business, how much of that would be, the quarter-on-quarter moderation, would all of that be because of pricing pressure, or is there any other big factor there? I think FX would be the other one, I'm assuming.
It's more of a mix issue, Neha. Pricing is obviously there, but it's very stable. So pricing doesn't stand out. But it's just that, the offset from new product launches, from the product mix has been a bit lower. That's all. So it's not that the price erosion is higher. Price erosion still remains at the same level. It's the upside from the other things that we see in terms of productivity, in terms of product mix. There is some timing issue, I would say there. So overall, well within the normal range.
So I shouldn't assume that the incremental business that we've seen in US, et cetera, is a lower margin business, and hence that's reflective in my gross margin.
No, that's not right. Yeah, you should not assume that.
Okay, got it. Thank you so much.
Thank you. Ladies and gentlemen, that was our last question for today. As there are no further questions, I would now like to hand the conference over to Mr. Richa Periwal for closing comments.
Thank you all for joining us for today's evening call. In case of any further queries, please get in touch with the investor relations team. Thank you once again on behalf of Dr. Reddys Laboratories Limited. That concludes this conference. You may now disconnect your lines. Thank you.